and the Managing Director of Ashok Leyland joins us now to give us an outlook on 2016. Mr. Dasari, good morning. Happy New Year to you and your entire team in advance. And thanks for joining us on the show. It's been a fairly decent year for the commercial vehicle sector. So in the first half of the year, the industry volumes have jumped by almost 35%. What's the expectation for the second half of the fiscal year as well as for 2016?
Well, first of all, good morning and wish you the same for the next coming new year. Yes, it has been a wonderful year for the commercial vehicle industry, the medium and heavy commercial vehicle industry. But please note that this industry was at a high of 350,000 vehicles just 3 years ago, and it fell for 2 consecutive years and came down to about 200,000. The last year we had a 15% uptick and we came up to 230,000. This year, the first half was very good because there was also a bit of a pre-buy because there was lots of safety and regulations coming from October 1st. So we've seen a little bit of a slowdown in Q3, but we're still doing far better than last year's Q3. And I can see the green shoots that it shows that a Q4 will also be fairly strong. So I expect the year to finish, full year to finish at least 15 to 20% higher than last year. But looking forward, Sonia, I think that, and Lata, that I think even if this industry grows at about 15%, it will take at least 2 more years of such growth before it even catches up to the previous high. And we know that even the previous high was far from where developed countries are in terms of the penetration of commercial vehicles.
No, nobody's saying that Nirvana is here, Mr. Dasari. But yeah, we are still counting our blessings at this point in time. Would one of the blessings be the Supreme Court ban on old trucks? Would that give you a bump up above that 15% growth for FY17?
I think so. I mean, this is something that the industry has been pointing out for quite some time, that if you want to stop pollution, stop polluting vehicles rather than stop very contemporary vehicles. So we had been suggesting this for quite some time, and government was trying to find ways and means to implement this, because it's a little bit of a complex way of implementing it. Because one person who's selling the old vehicle is not necessarily the person who's buying the vehicle. But I think there will be ways and means that the industry and the market themselves will figure it out. It's a welcome move. I'm sure it will have a nice, maybe another 4-5% additional boost coming for this, because of this.
But will it not weaken your clientele itself? I mean, let's face it, in India, we are squeezing out every last bit of value, even from old vehicles. You can hear me? Okay. That's a call drop, as our director says. So we will wait to reconnect with Vinod Dasari in just a minute. In the meanwhile, it's worthwhile pointing out that the mid-caps have moved apace. It's about 1/3% higher, so the advanced declines look fairly decent. 8 stocks in the green to 5 in the red. But I think the laggard in the market quite clearly is the Bank Nifty. ICICI Bank grinding lower. It's down about almost 1% at this juncture, and that is the biggest millstone at this point in time for the Bank Nifty itself. I mean, I don't want to make it sound very bleak. It's just about 0.2% lower, but it's the underperformer among indices, the Nifty Bank, that is. Okay, Mr. Dasari, before we lost that link with you, I was just asking you that, you know, as you ask the older than 15-year vehicles to be moved out, you will also have a pool of fleet operators who will be impoverished, who may not have the money to buy. So does it really translate into a goodish bit of fresh demand for trucks?
Well, I don't think there is a huge chunk of vehicles which are from more than 15 years old. Most fleet operators replace their vehicles every 3 to 4 years. So their vehicles will be fairly current. What happens with these 15-year-old vehicles is they get into very menial kind of operations, like moving sand or moving dirt around in villages and rural areas. Very little of this actually comes to the cities. So I don't see an impact on fleet operators. But please also note, Lata, that if they buy newer vehicles, they are far more fuel efficient, not just better in terms of emissions. So they also generate better revenue and better profits.
Okay, so if you had to give us sort of a bird's eye view of how the next couple of years will look for the sector, what would your call be for the commercial vehicle sector? Because a lot of analysts believe that there could be even a 25% growth by the time we reach FY18 in the sector, purely because of the replacement demand pickup, as you pointed out, and also the improvement in some of the sectors like mining, etc. Is a 20-25% growth a reasonable assumption for the next couple of years?
I don't want to be very optimistic, but it is possible. And I'm trying to be a little conservative on numbers, but it is actually possible because of four things. Two you pointed out. One is that the replacement demand. Second is the mining and infrastructure also starting to build. As the government builds more roads and airports and ports, I think there will be more demand for that. More so than the mining, the infrastructure will pick up the demand. The third is what Lata just pointed out about the old vehicles being disbanded, whether it's 10 years old or 15 years old. As this spreads across the country, today it's only at NCR. As it spreads across the country, there will be. Please also note that before FY18, BS4 will become nationwide. So there will be a bit of a pre-buy also. As people, there will be a difference in cost between BS3 and BS4 vehicles. So people will try to buy stage-wise as it's getting across the country by April 2017 when everything will go to BS5 or BS4 nationwide. I think there will be a bit of pre-buy also. So I'm fairly bullish for the next couple of years.
Okay, so we're just trying to do the math very quickly, and that's why we're asking you these numbers, Mr. Dasari. Would it be 350,000 vehicles being manufactured or being sold by the end of FY16? So, would that be a time when people will start looking at capex?
No, I don't think it will reach 350,000 by FY16. We will probably end somewhere around 270, 280,000 at best, leaving good headroom for another 1 year or 1.5 years of growth. I lost them again.
Okay, well, we could hear him, but yeah, it's not looking like 350,000 anytime soon. Probably we have to wait for FY17. But well, we'll just wait to reconnect with Mr. Dasari so that he can have his say on the matter.
There's actually some news that's come in on Suven Life Sciences. So if we can quickly just get that stock up for you. They have received 2 product patents in Europe and in Macau. So that's the latest development there, and that stock is now up almost about 2.5% as we speak. Suven Life Sciences should come up for you on your screen. Just trying to get more details on what this product patent is. Okay, this is okay. Not one is the new chemical entities for the treatment of disorders, neurodegenerative diseases. So these 2 product patents are to do with the treatment of neurodegenerative diseases, one in Europe and one in Macau. That stock is now spiking up almost about 2.5%. With these 2 new patents, Suven has a total of 20 granted patents from Europe and about 8 granted patents from Macau. So that's a buzzing stock.
After Jan 6th, when that telecom case is going to be heard in the Supreme Court, this would constitute as unimpeachable evidence of call drop, and I guess CNBC TV18 will be compensated for a call drop by the telecom companies. Well, we are still trying to fix that call with Vinod Dasari. All right, we have Vinod with us. Mr. Dasari, the point I was trying to ask you is that at what point does capex resume? Would it be in FY17 where you would be probably producing to 75%? What are you producing to in terms of capacity as an industry? And would you be, 80% capacity in by the end of FY16? So you will start thinking capex?
No, I don't think we will need capex at least for the next 1-2 years. Industry has had a capex at the rate of 350,000 or even higher, and I don't think there will be capacity requirements at least in the next 12 to 18 months, because there is also productivity improvements that have happened in the factories over this period.
Okay.
Where
Mr.
we
Da-
might have to look at capacity changes is if the light commercial vehicle comes back very strongly. That is a sector that has not been doing very well, primarily because of rural demand being slow. But if it suddenly bounces back, and it is supposed to come back in line with the heavy commercial vehicles, usually the lag is about 6 months. Now it has always been 12 months since the heavy commercial vehicle picked up and the light didn't. So I expect the light commercial vehicle to come back very strongly, and when it does, we'll have to evaluate our capacity options.
Okay, one final question then, since we have you with us. Ashok, Leyland's market share has been improving. It's now more than 23%, but that was in the last quarter. Since then, have you seen further improvement in market share?
Well, I think our market share is not 23%, it's closer to 30%.
Okay.
But I guess it depends on exactly which sector or region you're looking at. Yes, we are doing fairly well, but I think this is basically a result of three things that we have been doing over the last several years. We continue to invest in our network growth. In the last 5 years, we nearly quintupled our network across the country. The second thing that we have done is we continue to launch a whole slew of new products, and more are coming. You will see them at Auto Expo also, showcasing not just customer value vehicles but futuristic technology vehicles as concepts. The third thing that we did is that we invested a lot of effort and money in enhancing the productivity of our frontline. Today, Sonia, we are one of the only commercial vehicle companies in the world where our dealer sales executives actually use a little mobile device, a little tab to sell their vehicles. Everything else is done through that. So we have leveraged the mobility rather than people selling with books and diaries and all that. So enhancement of productivity of frontline, several new products, as well as a very established network is helping us. We did lose a little bit of market share in this quarter because we are not going to chase the discounts. We have to maintain our margins at a high level. We did maintain it above double digit for the last 3 quarters, and let's see how we maintain it in fourth quarter.
All right, Mr. Dasari, pleasure speaking with you. Who says digital marketing is only for the Flipkarts and the Snapdeals? It comes to the old brick and mortar legacy companies as well. Thank you very much for joining us. Have a great 2016.